We are facing even more delays coming out of China as the US has banned certain imports. And the question is, what exactly will the impact be on North Americans and potentially even Chinese companies? That's what we're going to cover in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into it. So you can see here that firms are warning of China shipment delays as the US bans Xinjiang inputs. Guys, correct me in the comments below if I got that wrong. I'll just call it XI imports. Companies say it will be difficult and costly to comply with laws that aim to prevent shipping and goods using forced labor. You can see that a US law blocking most imports from XI province went into effect on Tuesday. And where did that focus on? The focus was really in the name of the act itself. The act is called the Uyghur Forced Labor Prevention Act, and it presumes that all items produced in China's western region of XI or by entities linked to the government there are made with forced labor and blocks companies from importing such products. Now, what's interesting is the new law now shifts the burden of proof from the border authorities, the port authority type people, and it shifts the burden of proof over to the Chinese exporters to prove that these goods were not made in the XI province. You can see that many Western auditing firms have stopped investigating forced labor claims in XI province because of intense government surveillance and lack of access to factories. So in other words, in the name of potentially data security and just privacy in general, we haven't been able to audit these facilities. So if we can't audit these facilities, the assumption is that they're just all using the forced labor. How else can you decide against that? China's government has detained hundreds of thousands of people, mostly Muslim minorities, in a network of internment camps that are as part of an assimilation campaign. And effectively what that's saying is that they don't want them to hold Muslim ideologies anymore. So in other words, that could be considered almost like a cultural genocide when you're getting rid of the whole culture of a group of people. I understand why the Chinese would want to do that, but I just don't think you're on the side of an ethical perspective when you try and do something like that. You can see that China has actually rejected those allegations. A spokesman from China's foreign ministry said in a briefing last week that the US Forced Labor Act isn't based on facts and was being used to destabilize XI and contain China's development. And so here's where I say that the tensions are now continuing to heat up between the US and China. And like I always say, and I reiterate what Charlie Munger says, there's gotta be a way for these two countries to become friends. They can't continue to ratchet up this heat that's been building over the last couple of years, and in fact, over many years. And so this is an example of maybe we can find different ways to work together and not have to push such laws which effectively say, hey, we don't trust you, and so you have to prove to us that you're not using slave labor. Now the real question is, what are the impacts to the supply chains? Now the real impact is, one, what is the impact to Chinese companies, for example, like Alibaba? Because this is a primarily US port-based issue, I don't think there's going to be any real issues to companies like Alibaba. There might be with some of their products being shipped into North America, or at least in the US, but I don't think that it's going to be a material impact to the company. So the second question is, what are the impacts to US suppliers? Well, you can see here, supply chain auditors say most major companies have been preparing for the imposition of a law in recent months, with many conducting comprehensive due diligence. For example, Sam's Club, a membership store chain owned by Walmart, stripped products sourced from XI province and removed references to the region from its store and brands last year. So in other words, there's minimal impacts expected from this new law as businesses look to largely have already pivoted. So that's really good news. But as we talk about Walmart, they have a bigger issue brewing. You can see here from Walmart's share price action, you can see that Walmart is dealing with larger issues, mainly inflation and impacts to consumer spending. And so my question is, does the recent decline in the share price present a buying opportunity? And you can see here the margins are coming under pressure in fiscal year 2023 because, of course, Walmart is right now taking it on the chin to remain competitive. However, they did say that they're going to fix this throughout the remainder of 2023, so we'll see how this plays out. But, of course, you can see at the bottom here that EPS is expected to decline by 2% year over year, and that really shows you the pressure that Walmart's under dealing with inflation And it really shows you the weakness in the business model for Walmart, where when you don't have high margins, when your whole business model is a low margin business, you can get impacted by inflationary pressures. And so what does this say for the valuation that I have for Walmart? Well, you can see here that using a terminal multiple of 20 times earnings, which I think is healthy by all intents and purposes, you can see that the share price as a percentage of the valuation is approximately 122%. So a little bit on the overvalued side. If this comes down to under $100 per share, I would be a buyer of Walmart. I mean, at the end of the day, this is the greatest retailer on the planet. Although it is slow growth, I would put it as part of my dividend portfolio, but it would be something that I would include in my portfolio overall. And of course, guys, if you guys want access to the models, you can get access to that at the lower tier of the Patreon. And like I always say, there's really no risk to you, because if you decide that the Patreon is not for you after you try it out in the first month, just message me in the app and let me know that it wasn't for you, and I'll fully refund your first month subscription. So once again, there's no risk to you. Now, the other thing that you guys should be paying attention to is the fact that the housing market is slowing. We're starting to see cracks, and although home prices hit a record in May, I am predicting that home prices are gonna start declining as interest rates continue to increase. And in fact, I talk about that in the latest video that I put out, which you can get to right here.